Good morning. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the advisory intro package, where we're going to be looking at the 52-week business enhancement system that has been developed by ESS BIZTOOLS. SMEs need more support throughout the year. That is a very important statement when you look at the circumstances that Australian businesses are dealing with at present. The Reserve Bank has decided to leave interest rates at 4.35%, and the Governor of the Reserve Bank has indicated that she believes that there will be no interest rate reduction for at least 6 months. Inflation rates are high, and there are significant difficulties being encountered by business people. And this is causing inflation rates that are contributing to this problem. High interest rates, and all this is causing more business failures, more problems with business operators. Surely a time for accountants and bookkeepers to be showing more support for the SME community. And one of the big problem areas that the SME community are encountering was identified by the MYOB CEO, Paul Robson, in an article in the Financial Review in February, when he clearly identified that lack of fiscal management knowledge was one of the real problems of people failing in an SME business at around the 6 months mark. And I would contend, I think it's one of the contributing factors to failures that continue to occur in that first 3-year period of someone starting a business. Robson said that after 6 months, new businesses encounter problems. They do not understand payment terms from suppliers. It appears that a lot of SME operators, especially the new ones, assume that every supplier is going to give them 30 days credit, or maybe even more. That's not true. And with the climate of business failure all around us, I think it's only reasonable that some suppliers are looking for prompter payment terms. In some cases, cash on delivery, others 7 days, 14 days, 21 days. But were these new business operators warned? Did they have a discussion with an accountant or a bookkeeper or a business advisor? And were they warned not to just assume that they would be granted 30-day credit terms? The next key item that Mr. Robson identified was lack of familiarity with credit terms being granted to customers. Now, I'm sure you agree with me, if you could run a business and everything was cash, that's as long as the folding money exists, but credit cards will do, it would be great not to have to worry about giving credit to customers. But if the business is going to grow, in most cases, other than food retail type businesses, credit has to be given to customers. And therefore, there's a need to understand the initial process with a new customer, checking out their credit history, entering into an agreement with them, supplying them with a terms of trade letter, and clearly indicating to them whatever the payment terms that the SME has set, these are the terms that that customer needs to abide by. But that raises a question. I suspect that significant numbers of SMEs never really think about this. They just go ahead and give credit. Oh, yeah, you pay when you like. That's why they end up in having difficulties. We need to get the message across to SMEs that proper systems need to be put in place. And what that then leads to is no real control over debtors. There's no follow-up. There's no stipulation on the tax invoice when the payment is due. If it is 30-day terms that the client is offering, well, please discuss with them the benefit of putting a date stamp on and this is the date that payment is expected by. And if you're longer than that, you're outside of our credit terms. And ensure that there's a follow-up at that time. In fact, many businesses are now following up 3 days before the due date for payment. Just as a reminder, this is a friendly courtesy call. It all helps get debtors paid. Because Australia's debtors days outstanding is embarrassingly large. And it's not all the fault of government departments and big business. I know they get blamed for it. I think a lot of the fault is that the SME has not instigated a proper system in the first place. And if the customer has stipulated right at the beginning of the relationship that they require certain additional documentation to be submitted with a tax invoice, your client needs to make sure that that is submitted to them. I ran a seminar in a mining town a couple of years ago, and there were 2 business operators there operating identical type of businesses, and their customers were mining companies. One of them said to me, why are my debtors days outstanding so high? This is after we'd done an example of debtors days outstanding. And his debtors days outstanding was up over 90 days. And someone else in the room I knew was from the same industry, because I had the details of what industries the people attending, there was about 40 of them, what did they, what were their industries? And I said to this particular gentleman, would you mind telling us, I see you're in the same industry as this guy. And he said, oh yeah, we know one another. So what's your debtors days outstanding? And he said, oh, 32, 33 days. And the guy at the back who said over 90 days looked in shock. And the guy that had just given me the answer turned around to him and he said, you know, Bill, you never supply all the data that they want. You've got to attach that to the invoices. And that was the problem. The second guy was not submitting the data, so the payment office, which happened to be in Melbourne, and this was a mining community in regional Queensland, down in Melbourne, they just put that invoice aside. They never paid it. They weren't going to pay it. They required certain other documentation to be attached and sent to them. And therefore, he never got paid. How many of your clients, or indeed how many SMEs, are making that mistake? And then they complain that big business doesn't pay them. We need to make sure that our clients understand this. And the other big problem that Mr. Robson identified is not appreciating the need to pay the GST and tax deducted for wages from employees' wages every 3 months. Otherwise, the tax office get a wee bit upset. That needs to be conveyed to your SME client, the absolute necessity to put this into the cash flow forecast. If they had a cash flow forecast, it was probably not realistically drafted if they hadn't considered these things. What do they do about suppliers? Well, I think they should contact suppliers before and say, if I'm going to open a new account with you, can you tell me, confirm the payment terms? So they would know. If the supplier said, well, for the first 3 months, you're going to be on cash on delivery. And then for the next 3 months, we'll give you a 7-day account, and so on. At least they know. Now they may want to go and seek another supplier, of course. That's their right. That's their decision. But if not, and if they're going to go into business, they need to make sure they got the funds available to make those payments. So I've listed some of the other matters there on that slide that I've already commented on. And you can think about those and determine whether you can help your clients. I'm just going to go back to that previous slide, though, because there's a couple of other things I want to raise with you. I think there's a real requirement for an accountant or a bookkeeper, if you're giving this initial advice to clients, to really stress to them the need for proper accounting, business guidance from the very beginning of their business operations. Too many of them just go off on their own. They look at their bank and they say, oh, yeah, we got 40 grand in the bank. Let's start a business. And away they go, without any clear appreciation of the minefields that lay in front of them. You can help them, but you've got to be brave enough to have that discussion with your clients, because none of us like seeing clients that fail, especially in the first 6 months or even in the first two to 3 years. Invariably, they will owe you money if they fail, which you'll never get paid. And they owe other people money, which will never get paid. I think we need to be strong enough in our convictions that we as a professional group can guide clients on this process by indicating to them right from the very first contact with them that if they want you to be their advisor, you are going to be there with them from the beginning. You are not an historian. You're not just there to record the historical results. You're there to help create history. You're there to guide them through this process. I think far too many people go into business that were undercapitalized. They didn't have enough money. And it was very obvious if someone had sat down with them and worked out what their cash flow was going to look like, even if it was only for the first 6 months. But preferably it should be for the first 12 months. Just where is this business going to go? How's it going to fund itself? And take into account realistic debtors' days outstanding, which in today's climate in Australia, I suspect is at least 60 to 70 days, and see what effect that is on their cash flow forecast. If they can do better, that's fantastic. They'll have spare cash in the bank. But if that is what it turns out to be, well, hopefully, if they've done their balance of their forecasts correctly, they will have enough money. Please think about it. I think we've got to be far more upfront with these people and give them guidance, the sort of guidance you would be giving or the comments that you would be making if you were employed in a larger organization and you were the accountant or the chief accountant or the CFO, whatever title you want to give, and you were communicating with the CEO or the owner of the business. You're not worth the money they're paying you unless you're prepared to tell them what the issues are, to be honest, and to say, I disagree. This is how this is going to work out. We've got the financial plan. We're not going to have enough money because we haven't factored in certain information. And that can be a build-up of an inventory because of when stock can be received from various suppliers, especially if it's coming from overseas with the problems in the Middle East and in Europe at present. There's delays. They all been factored in to the cash flow forecast. I think you should be offering real accounting services from day one, not telling them to come back in 12 months and you'll do their tax return. That's just a byproduct of the overall process. What we've got to make sure is that they're still actively in business in 12 months. And Mr. Robson is saying many of them are not. I think they need more support throughout the year, and that's what I've just been really getting at, but I wanted to stress at the very beginning, they really need assistance when they're deciding whether to take that step to go into SME operations. Maybe they should work for a boss for another year, save some more money. I don't agree with people that tell me they talk to their clients once or twice a year. That's not accounting services. That's not helping them with the real issues. And at ESS BizTools, we are committed to supplying our members the resources to be able to help your clients daily, weekly, monthly, and repeat it again, daily, weekly, monthly, every month throughout the year, because that's how businesses operate. It's no use at the end of the year or once or twice during the year doing a post-mortem. What businesses need is advice for what they're going to do tomorrow and next week and next month. What's in the past has already happened. Sure, we have to record that. We have to get some key performance indicators on me and business metrics information and a tax return. But the real value that accountants have been trained to offer to SMEs is the future, helping them plan their business operations. And this is working with your clients at the coalface, getting involved in the business, not being some remote person like the people in the bunkers in the football terminology, reviewing a referee's or an umpire's decision that they've already had to make out in the field. And I'm not belittling the role of those people in the bunkers, but they're coming and looking at an historical event by the time they look at the TV screen to decide what may or may not have happened. I don't think that's the true role for an accountancy firm. Those of you who want to do that should be doing audits. But what we're trying to offer to you at ESS BizTools is a package of services that will get you started on this journey of being the key advisor, helping the client plan the future. And that's what's included in the advisory intro package. Technology and communications enable these services to be provided. ESS BizTools has got subscribers all over Australia, some of whom are running businesses from all parts of Australia using the technology, whether it's something like Zoom to communicate, or it's accounting software. And they're able to give their clients support. In larger companies, they employ a chief accountant or an accountant or a CFO. That role is to be part of the leadership team and to make contributions daily, weekly, monthly. I was the chief financial officer and company secretary of a listed public company. It had operations throughout Queensland, New South Wales, and Victoria, a little bit in South Australia. We used to have meetings nearly all day at various times of the year. But we start off by a plan for a 10-minute business review meeting, and other things would come up. We were a major meat exporter, meat processing company. So there were things happening overseas that we had to be very much aware of, what had happened in America overnight on prices, on deliveries, on shipments, what had happened in China or Japan and other countries around the world. There are smaller businesses also operating on markets around the world. They also need input and advice. The chief executive officer of a listed public company can be surrounded by 10, 12, in some cases 20 key executives who are all experts in their own area, who are all offering advice, and they're all communicating with one another. How does the CEO of an SME operate? They might have 2 or 3 direct reports. Unfortunately, some of them have not undertaken appropriate leadership training, corporate governance training. And they tend to be in sales and production type areas. Most SMEs do not employ a qualified accountant. But these companies, these businesses, these organisations, because some of them are sporting organisations and charitable organisations, all have similar problems to what the CEO of a public company has. The dollar values might be bigger in the public company arena, but they've still got problems. The SME CEO. And who does that CEO turn to? Who is there readily available to give them advice? This is the key role that we envisage. And we know it works because we've got accountancy firms that we're working with delivering this service to their CEOs of those companies on a virtual basis. They might only be involved for 1 day a week or even a few hours a week. But it's that key input that's very important. And you can influence that whole process happening by advising the CEO to formulate the rhythm of meetings daily, the leadership team, 10 minutes. What were the issues from yesterday that we really need to sort out this morning before anything else happens? What's the weekly performance been like? What were the key performance indicators? What was our projected profit? The reason large companies do this, and most of them do, is that if there's been a problem in a particular business activity, they can immediately set about fixing it. What happens with your SME clients? Do they even know that they had a major problem yesterday or last week where gross profit percentage fell from the expected 37% to 28%? Who investigates that? Is there been any accounting reports prepared which even tells them that? Now, that sort of problem can occur through a number of reasons. It could be because there's been invoicing errors made. It could have been because the cost of product rose and no one reflected that in the selling prices. Or it could have been fraud. There's a whole range of reasons. Big companies react straight away and find out what the problem was and fix it. What happens to the SME? Unfortunately, for many of them, they probably didn't know that problem occurred this week because no one had calculated it for them. And that problem might continue unfixed for months, rest of the year. And then at the end of the year, their accountant sits down and produces a very nice profit and loss account. And it shows them overall, oh, geez, your gross profit percentage dropped this year. It's only around 28%. Last year it was 36, and we thought it might have even gone a bit higher this year. They didn't know. This is why SMEs need advice. And today's technology and communications allow that to be delivered. Many SMEs around Australia are scaling up their operations because they've seen other Australian-bred companies, and it's great, go on to become world famous, listed on stock exchanges, talks of the founders now being billionaires. This is what keeps SMEs going. We're in the middle of the Olympics at present, and isn't it great to watch the success that some of these people are achieving? I'd love to see an Olympics for SMEs. That's what we really need. Because the same dedication and training and performance enhancements are needed by SME operators. And have you observed that virtually every athlete that I've seen interviewed thanks their family for support and their coaches? You're the coach of SME businesses. We need to be helping them to achieve, not analysing in 12 months' time what went wrong. It's too late. And based on Paul Robson's article, a lot of them will have failed. They have left the SME community. Sometimes they'll be bankrupt. Other times they've lost all their money. They're disillusioned. They've probably got a chip on their shoulder. They might be blaming everyone bar themselves. But a lot of that could have been avoided. Firstly, some of them should have been talked out of going into business in the first place because they didn't have enough money or they didn't have enough knowledge and an understanding of how business operates. But for those who did have enough money, did have a realistic budget and cash flow forecast, they then continue to need assistance because that's exactly what happens in larger corporations. And SMEs are no different in that regard. And in fact, I think an SME CEO's probably got nearly as many problems as what the CEO of a listed public company has, because the CEO of a listed public company delegates a lot of that responsibility to people he knows are capable of handling the job. And if not, they get fired and get replaced. The federal government and state governments are offering substantial grants to assist small companies to undertake all sorts of things in business operations. Are you aware of them? I am concerned that many accounting advisors that are holding themselves out as SME advisors are really not familiar with the mainstream grants that are available. They're there. Sure, there's a bit of work required to get the grant. After all, the government really doesn't part with big sums of money to businesses without proper process being undertaken, and that's the way it should be. I'm sure you'd agree. But could you secure more grants for your clients? I'm very disappointed that a lot of accountants tell me, oh, no, we don't give advice on research and development because you've got to be a scientist or an engineer to give that advice. I don't agree with that. We've developed a very detailed system in ESS BIZTOOLS to help our subscribers every step on the R&D process. And the preliminary material is available as part of the advisory intro package. So you could at least answer the CEO or the SME, and some of them might be just individuals trading in business. Well, you'd need to tell them they have to be a company to claim the research and development tax offset. So there's a whole raft of reasons why I think you can be very much engaged with your clients, helping them plan what they're going to be doing tomorrow and next week and next month, and preparing budgets and cash flow forecasts for it, preparing what-if strategies, and then showing them what the key performance indicators should be. So SMEs, if they are going to survive, really need this sort of support from accountants and bookkeepers. And obviously, if you are not going to give that, well, good luck with the tax returns. The tax commissioner, or the recently retired tax commissioner, warned 2 years ago there are significant changes coming on. He urged accountants and bookkeepers to become key advisors to SME clients, to understand the figures, to understand the data, to give them key business advice because of the changes in the technology that the tax office is introducing. From reports I'm getting from America, it's happening over there. They're a year or so further advanced from us. So where do you start? I think you need to sit down and really say within your firms, there is a distinction between the services you can offer. And one key group is what generally is called advisory services, and that means you're advising your clients on the future. That's what you're looking at. The future can be in 2 hours' time, 1 day, 1 week, 1 month, 1 year, or even further. What are they going to be doing? Setting up the systems, the plans, the information that's going to have to be produced. Training the leadership team members in what all these reports mean, making it fairly straightforward. Sitting down with foremen and leading hands and explaining key performance indicators to them. Making sure it's in a language that they understand. Asking for their feedback. What information would they like to see recorded every day? I said before, I was in the meat industry, and I can remember going into a smoko room, which was for the foreman of our largest meatworks, and talking to the assembled foreman, there was about 10 of them, about key performance indicators, and getting some very dumb looks. And they said, oh, is that bit of paper that turns up every morning? Yeah. Well, we don't understand what it means. So one guy just did that. He threw it in the rubbish bin. I said, oh, okay, right. What would you like to see? And a couple of them told me things. And I went back at lunchtime and said, how would this work? And we redesigned the form. We put it in the language that they understood. I reckon the office manager in that works could change his understanding of some of the terminologies back to the same as what the guys at the coal place understood it. What did they see? What did they need? Now, we made sure they got what they needed, but there was other things, of course, that management needed. We made sure that came out of the report. One of the key things is understanding your client's business, 1 inch wide and a mile deep, rather than a mile wide and only an inch deep. It's very important that you're able to dig down into your client's affairs. No one has challenged me in the last 3 years that I've been saying most accountants do not know your clients 1 inch wide and a mile deep. You don't need that or develop that sort of knowledge on your client's affairs, preparing an annual set of accounts and a tax return. But I can assure you, if you were working there full time, you would know a lot more about your client's business affairs. You'd know about the suppliers' preferences on various things. You would have made sure that there were inputs coming from customers. Hopefully the company would have a customer advisory committee that meets 3 or 4 times a year. And you would probably be responsible for organising that along with the sales manager. There's a whole range of procedural issues that go on in a business. Have they been reviewed? Are they safe? Is there changes that need to be made for security purposes, security of the company's business? There's a whole range of issues. And by undertaking that type of analysis, you'll understand where the weak points are. Is the business paying for goods that are not being checked when they arrive? Is the business receiving second-grade product and paying for first-grade product? Is some of it not even being received at all, first class or second class, because the stock's not being checked in? So where do you start? I think you need to look at planning the business activities on the lines that I just mentioned. Research on customer requirements. Development of the business's intellectual property. This is very important. And are they safeguarding it? How do they safeguard intellectual property? It can be confidentiality agreements. It can be lodging a patent application, a whole range of things. What's the business processes? What's the purchasing process? Who checks that the business receives what it's been paying for? The sales process, is there terms of trade looked at, especially for export transactions? very risky situation to send goods out of Australia with not having firmed arrangements of how you're going to be paid, especially by, pardon me, letters of credit. You need to make sure that they're in place and that the letters of credit are properly drafted. They've been checked. Otherwise, you will end up with stock in an overseas country that no one's paid for, and your client's chances of getting paid for that start diminishing day by day as your client runs around and then tries to organise payment. What's the employment process in the organisation? What team training and motivation happens within your client's business? You could make suggestions on changes to gain effective input from the team. Leadership team training is very important. And you have to be careful how you approach this, but by having discussions with the CEO, you will find out that the CEO has an understanding of the individual members of the leadership team and will tell you what he considers or she considers their deficiencies are. Then it's a good idea to develop a training program. Now, you won't be able to deliver all of the training program because some of it, I'm sure, is going to be beyond your own technical ability to do so. But the main thing is you have discussed it with the CEO and you've then probably got the role of organising it. So it might be a marketing expert that's brought in to talk on the marketing issues. It might be a product development expert on product development and so on. I think it's important that businesses establish a rhythm of meetings, not just held when there's a problem, not just held when the CEO is there. Meetings should take place whether someone's absent or not. It's part of the rhythm of meetings. I know many companies have their meetings now, and if you're not there, you phone in, so you're still participating in the meeting, so you know what goes on. And it might only be a 10-minute meeting on a daily basis, identifying key issues that might have gone wrong yesterday that are likely to still be there again today and tomorrow, need fixing. Then at the end of the week, weekly meeting of the leadership team to consider the results, to consider the key performance indicators and business metrics for the week, and look at the weekly profitability report for each individual operation. And what this allows is the immediate identification of a problem that occurred last week, hopefully only 48 hours earlier was the weekend date, so that there can be real action to fix whatever that problem was. And identifying the information required by the CEO and the other leadership team members to help them make decisions. That is the key role of accounting, I think. It's not the preparation of a tax return. It's the assembling of information that is able to be understood, that is accurate, that is prompt, and happens at a process. Every day at 10 o'clock, certain information's made available, so that the leadership team have the confidence that they've got the information, they can then direct the business. Not your role to direct the business, but it's your role, as I see it, to be ensuring that the system's going to be provided. Now, part of this process can also be predictive accounting reports. Now, this is really predicting the future. Budgets, cash flow forecasts, projected balance sheets, great documents. And in the advisory intro package, we have an introduction to this process so that you can start talking to your clients about that from the very beginning. So there's budgets for each business operation, monthly and then annual. The key items that are contained, the key data, debtors, creditors, inventory, capital expenditure. cash flow forecasts, monthly and then annual, projected balance sheets, monthly and then annual. That's the process. How much of it you would want to undertake if you're only just starting on this process, you can determine that, but we will give you information which will enable you to start communicating those concepts to your clients. If they want them, well, you can update your subscription because you're then going to be using the material to deliver the services to your clients. This information is vital for the business because it enables their plans that have been identified in the business plan to be then shown to them in financial terms. And they can say, that's what we want to achieve, but then it's got to be monitored daily, weekly, monthly. And in this way, you can become the storyteller. You can be showing them this is what the future is. This is what the balance sheet should look like in a year's time if we can implement these policies, if we can maintain gross profit percentage at 38%, if we can keep our inventory levels to various days, if we can keep our debtors days outstanding to 40 days average, and so on. This is the plan, just like an architect draws a plan. This is the plan for what this business should look like in 12 months, 24 months, 36 months time. So the 52-week business advisory system looks at doing all this. I've talked about the information required, the daily information, could be yesterday's numbers of sales, average sale. Then we got the weekly information, that weekly performance report, the flow of that information, which you can see there, and I've already really covered that. And then on a monthly basis, we have a profit and loss account for each activity. We have the key performance indicators and business metrics, which are very important, vital for management. They get more out of that than really the profit and loss account. They want to understand key information because they understand that. And then the comparison to budget, very important. Does the budget need adjusting? Do we need to prepare a supplementary one? And then the balance sheet analysis, monthly, not at the end of the year, monthly. What's the prompt creditors balance and days outstanding? This is the key suppliers that have indicated they want to be paid every 14 days. Our suggestion is you run a separate creditors account for them and calculate it so that management can see that, yes, we're trading at paying those key people every 14 days because they know if you don't pay them, they're likely to stop supply, and that can cause the whole business to crumble. And that's one of the things Mr. Robson was on about, that people have got this unawareness of supplier payments, how vital they are to keep the doors open, to keep the business rolling. Then we'd have the general creditors payments and days, the debtors balance and debtors days outstanding, work in progress, capital expenditure, R&D, and the updated rolling cash flow forecast, which is the adjusted what the year could now look like. We've still got the original forecast, but we're now making changes during because what's happened in the first 4 months. We've now add the 8 months of forecasts onto that, and this is what we're now going to look like at the end of June. And then the financial performance report that I imagine you're going to prepare if you're the partner or the team leader in this firm, that will go to the board of directors or board of advice. So within ESS BizTools, we have an advisory intro package, which gets you started on this journey. And we have a special price at present. You can get started for $89.10 per month plus GST, $89.10. Or you can pay up front and get a bigger discount because it only costs you $891 for the year. And that will give you a range of services and some training during the year, because we have a training session each month. We then have the starter package, which is the next level up. It goes up in steps, which gives you more information. The advanced package is an assembly of a whole range of accounting information, what was in the advisory intro, the starter package, and then we've added a lot more. The full research and development package, we're looking at capital raising, crowdsource funding, equity raising, early stage innovation company, Section 708 capital raising, all very important tasks for accountants who are fair income about assisting SMEs to be aware of. And then we have our big package, which is the financial forecast package. And that includes what's in the advanced package, plus a bit more to do with corporate governance, how board of directors operate, how board of advisors operate. But it also includes Plan Guru's great software package for the preparation of predictive accounting reports and training in how to use that software package with your 52 week of the year accounting system to really forecast the future. So that's the packages that ESS BizTools has available. Our vision is to assist accountants and bookkeepers to deliver an outstanding range of services to help you assist your SME clients on their business journey. Please contact us for additional information. If you need more information, why not send us an email, peter@essbiztools.com.au, or telephone 0747241118. And obviously, you are most welcome to visit our website, www.essbiztools.com.au. Thank you for being with us. I look forward to hearing from you. Have a great day. Goodbye. And I really do hope that you will want to have a discussion with us about the services that we can provide. Thank you.